Hey traders and investors, Serge Berger here. Today, I want to have a look at a couple of social media stocks and show you how they've started to act a lot better in terms of respecting the technicals and how to best trade these kind of stocks going forward. So let's first have a look at Facebook, which of course IPO'd back here in May 2012. It then really took the stock a little bit more than a year to really get its act together and start behaving better technically. And then in July of last year, it really started breaking out. And through a technical lens, really started acting very well with very tight patterns all over the place. And as well as respecting its moving average. You can see, for example, here the 50-day moving average and then the 100-day moving average really started to act well, and now the stock is really giving us some defined levels of resistance, defined levels of support, all those kind of things. But it really took quite a bit of time for Facebook to get to this point. And the same thing really is true for Yelp. Both of those business models and business models of these of some of the other companies are still very much not yet proven. So there's a lot of stuff that people were and remain skeptical of, but at least through a technical lens, the stocks have started to act better. So if you look at Yelp, it started to act much better in May of last year when it started breaking higher, and again, better looking technical patterns. All these kind of things, breaking past resistance lines, acting well on its various moving averages, not just the ones I have here, and now really has come off the highs and is again also in a much more technically respective way where there are better levels to focus around. In this case, the 150-day moving average actually do work quite well as a next very defined support level. So both Yelp and Facebook going forward are um, probably going to face plenty of volatility. But the way to trade these stocks is to focus around important single day candles or single week candles. And when I'm talking about candles, I mean these little guys. If you've never heard of these things, by all means, have a read up on them. But one day can really make a big difference in these kind of stocks of trading. If you all you have to do is go back to last summer when those stocks broke higher, or in this case, for example, with Yelp here in August 2013, you can see the stock broke higher and then fell into a nice base, and that was the rest of the story for the stock moving higher for the rest of the year. So one day can make a big difference. That's really the way to trade these stocks. You want to focus on big important single day moves or single week moves, and based on that you can really extrapolate a lot of information about the continuing trend for the nearer term type of time frames from a swing trading perspective. I hope this makes sense. Take care.